Let's talk about where do we go from here in terms of your bad loan purchases. We know you've purchased a huge chunk of bad loans, 2.1 trillion in the first tranche, 1.1 in the second, all for about 1.1 trillion naira. At least that was the valuation that was used to issue 3-year zero coupon bonds. Going forward, what should we expect in terms of NPL purchases?
We believe that the non-performing loan problem in the banking system has been concluded. We will have one or two situations where loans may be desirable for the system, for AMCON to purchase them. But as far as we know, all banks are in compliance with the non-performing loan regulation of the central bank. And I think that the issue of non-performing loans in the banking system at this time has been fully resolved.
Now, that regulation, I'm not sure to what extent it's firm, but we're hearing 5% maximum NPL ratio for the sector in whole. And AMCON obviously has a big role to play in keeping that ratio at that level going forward. What do you anticipate going forward? Do you see a situation where banks would have no choice but to come to AMCON and sell any NPLs that might push them above that 5% maximum guidance?
My understanding that is a retroactive rule. So banks will report to CBN regularly, and when in the reporting, the central bank identifies any banks as having more than 5% non-performing loans, that the bank will be required in a certain time to sell that excess to AMCON at a negotiated price between the bank and AMCON. We don't expect that there'll be a lot of activity going forward in that regard, but it's a escape valve so that the problems of non-performing loans never get this big again, that it threatens the banking system. So we think if banks adhere to the prudential lending guidelines of the central bank and they have good governance, that would be a rare occurrence that they have to come to AMCON to sell down.
Let's talk about regulatory approvals for loans, for the bonds that AMCON is issuing, and of course it might issue going forward. My understanding is that if you have regulatory approval for 3 trillion in loans, maybe you can just confirm that. And looking at considering the fact that you are still going to issue more bonds to buy equity into the rescued banks, what should we expect in terms of regulatory approvals for loans, or do we have enough regulatory approvals for whatever bond issuance that you might do in the future?
Well, again, I have to commend a lot of Nigerian institutions for all the regulatory approvals we received. We have received approvals for up to 3 trillion of zero coupon bonds in this instance. And those approvals include waivers on certain fees and on certain regulations. We'd still need, because our bonds have a federal government guarantee, we still need to seek the federal government guarantee for any excess beyond what we've issued so far. We think it's a good source of discipline, because we have to go back to DMO and Ministry of Finance and explain why we need to issue more bonds beyond what we've issued. But I think that all regulatory approvals have been accomplished, except we have to go back to Ministry of Finance through DMO to get additional guarantees when we need to.
So what you're saying is that for the bonds that you have to issue to buy equity into the banks, all regulatory approvals have been gotten for those?
Except the guarantee.
All right, we look forward to that. Now let's talk about a bit of a thorny issue, the tradability of the bonds. There's been some, if you like, some lack of clarity as to whether these bonds are trading or not trading. We know recently that those bonds were listed on the NSC, but there's a sense, particularly when talking to some of the members of the Financial Market Dealers Association, that those bonds are not trading the way you will anticipate, at least the way the FGM bonds are trading in that market right now, in the OTC market.
Well, AMCON is an issue of bonds, and I like to think we're a responsible issue of bonds. And that means that we're going to do everything we can on our side as an issuer to make sure the bonds are tradable. To this end, we've made it a large, homogeneous issue. We registered it, which we didn't have to. We've listed it, and we've engaged some market consultants to tell us what other things we can do to make these bonds tradable. In the long run, tradability of a bond depends on 3 people: the buyers, the sellers, and the intermediaries. And what we need to do is to work with all those groups, and it will evolve. And it's too early now to decide whether or not they're liquid or not, whether they're tradable or not. This is an evolving process. Our hope is that as an issuer, we will do what we can to assist the other people to make sure our bonds are able to be traded. Whether they actually traded and in what volume depends on the market, and that we do not control.
Let's talk about the asset management strategy going forward. Like I mentioned earlier, you now have a huge portfolio of bad loans. I'm sure many banks are not envying you right now, but obviously this is your business. So what should we expect going forward in terms of how you manage this portfolio?
Well, when we talk about assets, it's very, very important for people to understand that AMCON bought loans. And those loans fall into three categories as far as we're concerned. The borrowers that can and will pay, the borrowers that cannot pay, and the borrowers that refuse to pay. The first group, we will work with them, we will try and restructure their bonds. Maybe they want to pay, but they cannot because of interest rates or the term of the loan. We will sit down with them because it's in the interest of everybody that these businesses continue. The second group that cannot pay, when we do an analysis and think that this is an unsustainable business, we will have no choice but to go in there and enforce our collateral rights and take the collateral. Then that becomes an issue of asset management once we receive those collateral. The first group, the collateral never belongs to us. They restructure their loans, the loans are performing, and even though we still have the collateral as guarantee for the loans, the assets do not ever come to AMCON. The second group, the assets will come to AMCON, and we have to manage them, and the overriding goal is to have maximum recovery for the federal government of Nigeria. The third group, who refuse to pay, we will of course go after them with all the powers that AMCON has in the law. We hope that last group is a small group, but we will do what we can to recover the money from people who can but refuse to pay.
Let's go back to the first group which you mentioned. In other words, those that can probably want to pay but cannot pay right now. Would AMCON be making any further financial assistance available to people who need, for instance, more financing to restructure their businesses to make it possible for them to pay?
As a general term, AMCON does not want to be a lender. If we determine that it's in the interest of AMCON's recovery that more money is advanced, our first option is to, in the context of a restructuring, is to approach banks and work with the banks to make available the extra money if it makes sense. So the money
won't be coming from AMCON in that case?
It is highly unlikely that AMCON becomes a lender because the banks have lending expertise and we will want to work with them in the context of us being the beneficial owner of the loans and trying to get the maximum recovery. So if additional funds are required, we will endeavor in most cases to work with the banks to do that.
Right, let me just sign off on the final, should I say, controversial note. There is a view that because AMCON issued bonds in two tranches, one at 10.125% and the other at 11.8%, the holders of the bonds are already making some losses, and that to some extent already is eroding the equity, which is already negative, of some of the rescued banks as well. So in other words, implying that either AMCON has to pump in more money or the new investor has to pump in more money. What are your thoughts on that?
It is a complicated question, and it's in two parts, so I'll answer that. The first part is people who bought bonds at 10 and an eighth. Have they had losses because central bank raised interest rates rose generally, and now interest rates are now 11.8% for the same kind of bond? Yes, but that's a normal market loss. Interest rates could have gone the other way and they'll have had a gain. So that's something that AMCON cannot control. But the more important issue is, will the banks have been better off if AMCON hadn't taken off their non-performing loans in December and waited till March? The answer is no. The replacement of non-performing loans that earn nothing, have no yield, with an interest-bearing, more liquid, more performing asset is always a good thing. So yes, the situation would have been much worse if AMCON had acted later.